Yes. Part 1, the real difference between the 1% of traders and the rest. It isn't intelligence, it isn't the strategy, it isn't the indicator, and it definitely isn't luck. It's mindset. Have you ever stared at a chart and realized something uncomfortable? That the thing deciding your results isn't the market. It's you, not the setup, not the breakout, not the news, but the way you think before, during, and after the trade. That's the separation. The 1% trader does not think like the 99%. The 99% look at the chart and think, how much can I make? The 1% look at the chart and think, what can go wrong? That single shift changes everything. Most traders are outcome focused. The 1% are process focused. Most traders want to be right. The 1% want to be disciplined. Most traders feel emotional swings with every candle. The 1% stay emotionally neutral. That's the mindset. And here's the uncomfortable truth. The market doesn't pay you for being smart. It pays you for being stable. You can have the best strategy in the world, but if you panic when price moves against you, you are not 1%. You can have years of experience, but if you increase size because you feel confident, you are not 1%. You can understand technical analysis deeply. But if you move your stop loss out of fear, you are not 1%. The 1% trader understands something early. The real battle is internal. Fear, greed, impatience, ego. These are the forces that destroy accounts, not the market. The market is neutral. Your reaction is not. The 99% react emotionally. The 1% respond strategically. The 99% chase momentum. The 1% wait for confirmation. The 99% revenge trade. The 1% reduce risk after mistakes. The difference is discipline under pressure. Anyone can trade well when they're winning. Very few can trade correctly when they're losing. That's where the 1% is built. In losing streaks, in drawdowns, in boring sideways markets, in moments when nothing exciting is happening. Because the 1% trader does not need excitement. He needs consistency. He doesn't wake up asking, what's the hot trade today? He wakes up asking, can I execute cleanly today? That's the mindset. It's boring. It's controlled. It's repetitive. But it works. And here's something deeper. The 1% trader has already accepted loss before entering the trade. That's why he stays calm. The 99% enter hoping not to lose. The 1% enter prepared to lose. Preparation removes fear. Hope creates fear. That is the psychological divide. When you stop trading to win and start trading to execute, you begin stepping into the 1%. The market does not reward emotion. It rewards structure. It rewards patience. It rewards risk control. And those traits come from mindset, not from strategy. So before you ask how to become profitable, ask yourself this. When you lose, do you stay the same? When you win, do you stay the same? If the answer is no, you are still thinking like the 99%. Now let's go deeper. The 1% trader is not fearless. He just understands fear. That's the difference. Most traders think the goal is to eliminate fear. It's not. Fear is natural. Fear protects capital, but unmanaged fear destroys execution. The 99% feel fear and react immediately. They close trades too early. They hesitate on valid setups. They skip trades after a loss. They reduce size randomly. They change strategy mid-drawdown. The 1% feel fear and still follow the plan. That's mindset. It's not about emotion disappearing. It's about emotion not controlling behavior. You can tell exactly where a trader stands by how they behave during a losing streak. The 99% start questioning everything. Maybe my strategy stopped working. Maybe the market changed. Maybe I need a new system. No, what changed wasn't the market. It was their confidence. And confidence that depends on recent results is fragile. The 1% trader expects losing streaks. He builds his risk model around them. He doesn't increase size to recover faster. He doesn't double down. He doesn't revenge trade. He reduces exposure if necessary. He protects capital first because he understands something critical. You cannot think clearly under financial pressure. The moment your account size starts controlling your emotions, you lose objectivity. And once objectivity is gone, discipline follows. This is why position sizing is mindset, not math. Anyone can calculate 1% risk. Very few can stick to it when emotions spike. The 1% trader respects his risk rules more than his opinions. He doesn't care how confident he feels. He doesn't care how perfect the setup looks. He doesn't override structure for intuition, because he knows something the 99% don't. Consistency beats confidence. Confidence fluctuates. Consistency compounds. And this is where most traders sabotage themselves. They increase size during winning streaks. They feel invincible. They feel like they've figured it out. Then variance hits, and the larger size amplifies emotional damage. Now the drawdown feels bigger. Now the pressure increases. Now discipline weakens, and the spiral begins. The 1% trader scales differently. He does not scale because he feels good. He scales because his data supports stability. He looks at months of performance. He analyzes drawdown behavior. He asks himself, did my execution stay consistent? If the answer is no, he does not scale, because he understands scaling amplifies flaws. It doesn't fix them. Most traders don't fail because they lack strategy. They fail because they lack emotional control under exposure. When size increases, pressure increases. Character is revealed. The 1% trader builds character before increasing pressure. That's why he lasts. Another difference. The 99% trade for validation, the 1% trade for execution. The 99% want to prove they're right. The 1% want to prove they're disciplined. The 99% check P&L constantly. The 1% check rule adherence. One mindset is ego-driven. The other is process-driven. And ego is expensive in trading. Ego makes you hold losers longer. Ego makes you cut winners too soon. Ego makes you increase size prematurely. Ego makes you argue with the market. The 1% trader has learned to detach identity from outcome. A losing trade does not mean he is wrong as a person. A winning trade does not mean he is superior. It is simply one outcome within a long statistical series. That shift is powerful, because once you stop attaching self-worth to trades, you stop overreacting. And when you stop overreacting, your equity curve stabilizes. The market rewards stability, not brilliance. You do not need to be extraordinary to be in the 1%. You need to be controlled. That's it. Controlled risk, controlled emotion, controlled expectations. If you can remain the same person after 5 wins and 5 losses, you are closer to the 1% than you think. But if your behavior shifts based on recent results, you still think like the majority, and the majority never last. This mindset is built slowly, through repetition, through painful awareness of your own weaknesses, through watching yourself break rules and deciding not to repeat it. It is not glamorous, it is not exciting, but it is necessary, because the 1% trader understands something simple. The market does not reward effort, it rewards discipline. Now let's talk about patience, because this is where the real separation happens. The 99% trader feels the need to act. The 1% trader feels the need to wait. Most people cannot see T still in front of a chart. They see movement and feel opportunity. They see volatility and feel urgency. They see a small setup forming and convince themselves it's good enough. But the 1% trader understands that good enough is expensive. Precision matters, and precision requires patience. The majority trades because the market is open. The minority trades because conditions align. That difference sounds small, but it changes everything. Impatience leads to overtrading. Overtrading leads to unnecessary exposure. Unnecessary exposure leads to emotional fatigue, and emotional fatigue destroys decision-making. The 1% trader knows his edge does not appear every hour. It may not even appear every day, but he is comfortable with that, because he is not paid for activity. He is paid for accuracy. There is a dangerous belief among traders that more trades equal more profit. That belief keeps people stuck, because every trade carries risk, and risk taken without edge compounds losses. The 1% trader protects his energy the same way he protects his capital. He does not waste attention on mediocre setups. He does not force trades out of boredom. He does not chase momentum after missing an entry. Missing a trade does not disturb him, because he knows opportunity is constant. But discipline is rare, and discipline is more valuable than opportunity. Another major difference, the 99% trader needs constant feedback. They want quick wins. They want immediate validation. They feel uncomfortable when nothing happens. Silence feels like stagnation, but silence is often where clarity is built. The 1% trader understands that flat days are part of the profession. He does not measure productivity by excitement. He measures it by clean execution. If no trade meets his criteria, that is a successful day, because protecting capital is success. This mindset removes desperation. And desperation. Ion is visible in trading behavior. Desperate traders widen stops. They jump into late entries. They size up to recover faster. They break rules because they need a win. The 1% trader does not need a win. He needs discipline. That is the core shift. When you stop needing outcomes, you start making better decisions. When you stop chasing profits, you start protecting process. And when you protect process, profits follow naturally. There is another layer to this: timing. The majority tries to predict every move. They believe constant analysis will create certainty. There is no certainty. The 1% trader waits for asymmetric opportunity. He does not try to capture every move. He waits for moments where risk is clearly defined and reward potential justifies exposure. He understands something critical. Not trading is a position. Staying flat is a decision. Capital preserved is power maintained. The market will always offer another setup, but capital once lost requires time to rebuild. Time is more valuable than most traders realize. The longer you survive, the sharper your edge becomes. But survival requires restraint. The 1% trader thinks in months and years. The 99% think in days and weeks. Short-term thinking creates emotional volatility. Long-term thinking creates stability. Your confidence will swing constantly. If you evaluate yourself quarterly, you see patterns instead of noise. That shift in time horizon changes mindset completely. Patience is not passive. It is controlled readiness. It is the ability to sit in front of opportunity and wait for confirmation. It is the ability to close the platform when conditions are poor. It is the ability to end the day red without trying to fix it. And that level of restraint is rare. But that is why only a small percentage reach professional consistency, because most traders are addicted to movement. The 1% trader is addicted to discipline. He is not impressed by large candles. He is not shaken by volatility spikes. He is not tempted by every breakout. He waits, and when he acts with clarity. That is mindset, not flashy, not loud, but powerful. The market does not reward speed. It rewards patience under pressure. And patience under pressure is built through self-control. If you can learn to sit when others are rushing, if you can wait when others are chasing, if you can remain neutral when others are emotional, you are moving toward the 1%, not because you are smarter, but because you are steadier, and steadiness wins in the long run. Now we come to the final layer of the 1% trader mindset: identity. Because at some point, trading stops being about charts. It becomes about who you are. The 99% see themselves as traders trying to make money. The 1% see themselves as professionals managing risk. That shift sounds subtle. It isn't. If you see yourself as someone trying to win, you will chase wins. If you see yourself as someone managing risk, you will protect capital. One mindset is outcome-focused. The other is process-focused. And process-focused thinking builds longevity. Longevity builds wealth. The 1% trader does not wake up asking, how much can I make today? No drama, no urgency, no emotional attachment. Execution, repeated, over and over. The majority believes success in trading is about high returns. It isn't. It is about low error rates. Minimize mistakes. Minimize overexposure. Minimize emotional decisions. And you maximize stability. Stability compounds. Instability collapses. The 99% are constantly searching for something new. New indicators, new strategies, new markets. The 1% refine what already works. They understand that edge is simple. Discipline is where the real money is made. Another uncomfortable truth: the 1% trader is comfortable being misunderstood. He does not need to prove profitability. He does not need to show screenshots. He does not need external validation. His focus is internal consistency, because once you rely on external validation, ego enters the equation. Ego makes you hold losers to avoid being wrong. Ego makes you oversize when confident. Ego makes you trade when you should step away. The 1% trader has removed ego from execution, not because he is emotionless, but because he has trained himself to recognize when ego appears. Self-awareness is a weapon in trading. The majority are unaware of their emotional shifts. The minority monitor them constantly. They know when frustration rises. They know when fatigue lowers discipline. And when those signals appear, they adjust behavior. Sometimes that means reducing size. Sometimes it means stopping for the day. Sometimes it means not trading at all. That is not weakness. The 99% believe they must always be active. The 1% know when to step back. And stepping back often protects more capital than any winning trade. Here is the deeper truth. The market does not care about your goals. It does not care about your timeline. It does not care about how hard you try. It responds only to behavior. If your behavior is unstable, your results will be unstable. If your behavior is controlled, your results will stabilize. The 1% trader understands that wealth in markets is not explosive. It is cumulative. Small edges, controlled risk, repetition, over time. That is how accounts grow. Quietly and consistently. The reason only 1% reach long-term consistency is not because markets are unfair. It is because discipline is rare, patience is rare, self-control is rare, but those are trainable traits if you are willing to confront your impulse. Yes, if you are willing to accept slow growth, if you are willing to prioritize process over ego, you begin thinking like the 1%. And once that shift happens, everything changes. Because now you are not chasing the market, you are managing yourself within it. And that is the real edge. Not prediction, not intelligence, not speed. Mindset. The 1% trader mindset. That is the separation. That is the difference. And that is what truly determines the outcome. And discipline is mindset in action. And that is where the real work begins.